Hi, this is Robert Kiyosaki, and you're listening to Capital Hacking. This is the most important thing you can listen to today.
Here's the one.
I have a dream.
With great power comes great responsibility.
I could do this all day.
This is it. Don't get scared now.
They may take our lives, but they'll never take our freedom.
Cinderella story out of nowhere.
Did you know that the only thing we have to fear is fear itself?
Capital Hacking begins in 3, 2, 1.
Welcome back to the enormous show, or should I say huge?
It was huge. And this was the first time that I got a chance to meet Mat Sorensen, CEO of Directed IRA. And it was a treat. He taught us so much stuff. You guys are going to get a ton out of it. I am also a client of Directed IRA. I have rolled over IRA money into accountable equity, the accountable equity that every intelligent investor should.
Oh, that's actually on our website. The choice of intelligent investors. Okay, so Mat Sorensen, a good friend of ours now, right, John? I mean, you're
Yep.
getting, you can see why we're the brothers from another mother's. But he is coming out to be the guest, the keynote speaker of the next incredible Learn and Grow. That's one of the secret news messages we release, or scoops we release in the show. August 23rd and August 24th, private dinner with him the 23rd. Let us know if you want to find out more. Just hit accountableequity.com. The show in and of itself, we cover the things that create wealth the Warren Buffett way. We cover the Warren Buffett method. And then we talk about the backdoor method of doing it tax-free with an IRA. So if those two things pique your curiosity, you're in for a treat.
Let's go.
Yeah, John, come on. You know how long we've actually had Matt on here a few times, but I wanted you to get to know Mat Sorensen.
Very, very anticipated interview here. I've heard so much about Mat Sorensen. I'm a client of Mat Sorensen's, actually, Directed IRA. My wife and I rolled over some IRA money over into accountable equity, because that's what every investor should do.
Yeah, that's what smart people do, you know.
That's right. And a lot of people don't understand or realize you can roll over IRA and 401k money into, using Directed IRA. So without further ado,
are you taking his thunder?
I told you we were gonna have fun. Without further ado, Mat Sorensen, can you just give us a little bit about who you are and welcome to our show?
Yeah, thanks, guys. Thanks so much. It's awesome to be here. I'm going to be out in your neck of the woods. I'm going to be on the East Coast. When is that? Yeah. September?
August? No, last weekend of August 23rd, I believe it is. We're going to host you.
All right, I'm excited for that. So, my name is Mat Sorensen. I'm just heck of a good guy. I'm a Gemini. Like to hold hands, take long walks on the beach. I'm not a cuddler, though, but no. No, I'm a lawyer. I'm a business and tax lawyer, got a law firm, KQS Lawyers, represent clients across the country. But I got really focused in helping clients as a lawyer use their IRA or 401k money to buy real estate. It's this little niche practice area I developed, and then wrote the #1 book in the field on it called the Self-Directed IRA Handbook. And then I would send my clients to crappy custodians that are now my competitors. And I was like, guys, there needs to be a good company that actually handles people's IRAs and 401ks, that can invest in real estate and private funds and do private money lending and syndications and small business. And so I just started my own Directed IRA. That was end of 2018. We've been in business now 6 years and have 1.8 billion in assets and 17,000 accounts. Like, we opened 750 new accounts last month.
Whoa.
Wow.
Let me get the stats. KPIs. Yeah. Okay. $1 billion plus, billion what?
Yeah, 1.8 billion.
Got that. Okay. How many clients?
So we have about 16, we're between 16 and change, almost to 17,000. And then, because it grows fast, because we opened 750 new accounts in April.
Wow.
You deserve all the blessings that you're receiving because of the work you're putting in. This is not magic. You are grinding, my brother. You're on the second version of the Self-Directed IRA handbook, right?
That's right, yeah.
You're the #1 author in the space. And man, I do tell my boys how much I appreciate you. And I just like the vibe you've created around your whole business.
Yeah.
And I think it's you and Matt. Now, Matt and you are with the lawyer business. Mark. I say Matt every time. It's Mark
get called
Kohler.
Mark all the time. Yeah.
He's very funny, by the way.
Yeah,
but
he's
Matt,
great.
congratulations on what you've done here. But now for those listeners, John and I know listeners that do not understand what we're talking about.
Yeah.
Let's get into a frame set. We're driving on the road. These people love capital hacking for the jokes, as John always says, but they've heard this idea of self-directed IRA, and they're all like, "Oh yeah, I can do that with Vanguard.
Yeah.
I have Vanguard. I can self-direct wherever I want." So you got to define this a little differently. Teach us why are you so special?
Yeah. So Josh, I know why people come to the Capital Hacking Podcast. They come for the jokes, but they stay for the education.
Hey,
You know?
I like it.
You guys can use that. Make sure you do know that's trademarked by Mat Sorensen, not to be used without express written consent of Mat Sorensen Inc. But okay, here's the thing, because I talk about this all the time. I'm like, your IRA can buy a rental property down the street. Your IRA could lend someone money on a real estate deal and be the private money lender. Your IRA could lend to an LLC buying a bigger real estate deal that's not publicly traded, with 50 or 100 other people. That's a deal you couldn't otherwise do on your own. And a lot of people are like, awesome, Matt, but I called up Fidelity and they told me I can't do it. Well, that's not because IRAs can't do that. That's because Fidelity IRAs can't do it. Fidelity, TD Ameritrade, Merrill Lynch, they're all broker dealers. So when you have an IRA account with them, you can invest in what they sell. Financial products, stocks, bonds, mutual funds. You've got an IRA at Northwestern Mutual or New York Life. What do you think you can have in your IRA there? An annuity, because that's what they sell. So what you do is, if you have money, let's say you've got 300 grand in an IRA at Fidelity, and you're like, I want to invest that 300K in real estate, or maybe just 100K of it. Well, you need to set up a self-directed IRA, is what they're called. Directed IRA is the #1 fastest growing, best company in the business. There are others that do it, but you don't need to know them. And so, because, you'll get terrible service. So come to Directed IRA. And so you move your money from Fidelity to Directed IRA. We have Roth IRAs, SEP IRAs, traditional IRAs, HSAs, whatever account type you currently have. And it's not taxable, no penalty. But now when you have your money over in an account with us, let's say you moved 100 of that 300,000 traditional IRA at Fidelity. Now you've got 100,000 at Directed IRA. Now we'll let you invest in whatever's allowed by law. And it's pretty much everything. You just can't buy, we're not talking about buying like personal assets like a home you live in. We're talking about investment assets, small business, real estate. Those are the most common things. And so that's essentially what a self-directed IRA is for everyone that hasn't heard about it. But here's why it's huge and why I love talking about it. There is $38 trillion in US retirement accounts. There's no more money anywhere to invest in anything than US retirement accounts. Why do you think Charles Schwab and all these, Fidelity and some of the biggest financial services companies focus so much on retirement accounts? Because they're not dummies and they know that's where the money's at. And so it's just a huge opportunity for anyone listening that has that little sliver of 38 trillion in their own account. I want you to know. Yeah, I want you to know. It's not just beholden to Wall Street. You don't have to just sit over there buying the same crap they're selling everyone else. You can take control and invest in assets care and love, real estate being a super popular one. And that's what we're based. Those 750 accounts last month that we opened here at Directed IRA, that's what they're doing. They're taking that mindset of, I'm going to take control of this, invest in something I know that's going to get me a better return than this crappy account I have, in Wall Street.
So, by the way, that was great articulation. Thank you for that information. And, one of the things that I love about redirecting IRAs, and I've redirected into multiple syndications, is that you can go visit these assets. When people invest in, with a financial planner or wherever, in mutual funds, annuities, you're not going to see that company. You're not meeting the employees. You're not, when we go to Renault or LBI or any of the other hospitalities that Josh has, it's like we get to see it like live in person, stay there, and really enjoy those assets that we're now a part of. One of the questions that I have here, because I know there are certain rules, let's say if you redirect an IRA and you buy real estate, what are some of the rules that you have to follow to make sure you don't violate anything?
Yeah. Let me just mention on the front end of that comment you had, John, because I really feel that. That's why I love self-directed IRAs, is that it's very tangible. Like you're investing in entrepreneurs and people you know and can talk to. Like you're investing in properties and businesses in your community that are employing people, that are growing, that are going after it. That's why I love it. You know, I don't want to just put more money into General Motors or XYZ big publicly traded company that doesn't matter. You know, I'm just a little, you know, I'm just this little nothing to them, but it matters. And so you can get engaged. And also, I think you have the opportunity to drive better returns too, because you're not in this publicly traded market trying to beat the market where do I really have the ability to make a better decision between buying one publicly traded stock versus another? Like those things just go up and down based on the market and so many other factors I can't really get my head around. But I feel like I really can, if I'm a real estate investor, understand real estate, or from a business owner, understand a business and a concept and what can work and what can't. So as to your question though, there are some rules of what you can't do. And so the primary rule is called the Prohibited Transaction Rules. And this is 4 chapters in my book. I can geek out on this and I'll try not to. But the gist of the Prohibited Transaction Rule is it restricts who your account can transact with. And it basically says your IRA cannot transact with someone who is a disqualified person. And a disqualified person starts with you, your parents, your kids, and then your spouse. And this is for the people in Utah, this is all of their spouses too. They're all prohibited. All right? So for example, let's say you're like, well, my dad owns a rental property and you know he's getting old, he wants to sell it, but I want to buy it with my IRA. Well, you can't do that, you know, because your father is a disqualified person on the list. Basically, the logic of this rule was the IRS was like, all right, retirement accounts are tax preferred accounts, whether it's a Roth or a traditional, it doesn't matter. When you make money in it, nothing pops on your 1040. There's no tax due. And so the IRS is like, we don't want you doing transactions with yourself or your dad or your kids or people where they felt like you could manipulate a deal to minimize taxes. So they just put those people on the list and said, you cannot transact with them. Also, let's say you bought we have clients that buy short-term rentals sometimes. And like, if they own the short-term rental, they can't go stay there. Now, like your example you talked about earlier, let's say you invested in accountable equity and you're going to stay at one of their properties. Because your IRA doesn't own 50% or more, it's okay. But if your IRA bought something and then you want to stay there and your IRA owns it 100%, it's a problem. So that's called the Prohibited Transaction Rules. So basically think about it. Don't buy stuff that's connected to you personally already or your family, parents, kids, spouse. And also don't buy assets just to have personal use of them.
I'll tell you what. You know, what we did is we said, Matt, can you come in here, hit it hard, make sure everybody's curious, right? Because these podcasts are meant to give you resources. I think you've got us curious. I'm going to summarize the curiosity for those listeners. One of the craziest parts of this that I just want you guys to hear, Matt keeps talking about buying a rental property with your IRA for the benefit of your retirement. Right. That's the whole point. Now, the negative of that is it feels like, I will say this. Let me tell you the number one misunderstanding I think most of you are having right now by accident. You don't even know you're having it. We are not saying you're draining your IRA to buy that rental property. We're keeping it inside the legal protections of an IRA by moving it to this program at Directed IRA. Does that come up as a question? Like I've heard it come up?
Yeah. And in fact, every year there's a case on this where it gets screwed up. It's the sad thing where they say, you know, there's a case in the tax court where someone took a distribution of their IRA and then used that money from the distribution to go buy real estate in their personal name. That is not what we're talking about. We're talking about your IRA that is at a broker dealer and transferring it to a self-directed IRA. So you still have an IRA. It's just instead of being at Merrill Lynch or moving from Merrill Lynch to Charles Schwab, you've gone from Charles Schwab to Directed IRA. We're still an IRA custodian. You still have an IRA account. It's just that account owns the real estate. It buys the real estate. When there's income coming on it, the rental income goes to the IRA. When the property sells and there's a gain, that goes to the IRA. Same thing if you invested in a syndication. It owns the piece of the syndication or the bigger deal or fund. and it gets any of the cash flow that's coming out, whether it's off of the rental income of it or the sale of the property. And so that's all contained in an IRA.
Yeah. So I think you did that great. And that's actually the key thing we want to get across to you, Billy and Jenny, who are the two number 1 and 2 listeners of the show. So we've gotten that across. Next, here's the other cool thing about this IRA stuff. It allows you to have bigger, I think, not only did we talk about private assets or real estate direct, kind of choice into an asset, I should say.
Mm-hmm.
But it also gives you a longer horizon, Matt. And think about the people who have the biggest returns, the Warren Buffetts of this world. It's because they never tried to flip anything. So if you're buying in your own cash account, don't you feel like the urge is to flip it so you can buy another thing and flip it and get the gain? Well, that'll destroy you from a tax basis, by the way, but it might be the right choice for you. Absolutely. Here, you don't have to flip it. You could go for the thing that's going to compound and compound and compound, but it might take 10 years or 5 years.
Yeah.
So it extends your horizon, gives you a lot more upside.
Yeah. And I think that's what, and from my experience, as like a wealth lawyer representing clients as a lawyer for, over a decade, 15, 20 years, I'm almost on 20 years. Can't believe it.
Congrats.
And so, I've really found that the people who have real significant wealth, they did it slowly over time. There wasn't like one thing that happened and they made all their money. They just did something consistently and built it over time. And for your retirement account, this is a long-term wealth building tool, right? We're going to build something if you're in your 40s. I mean, you've got another 20 years until you hit 59 and a half to when you're going to utilize those funds. And if you're starting earlier than that, great. You got a lot of runway ahead of you and compounding. I pulled out my phone because you're talking about time. And this is an interesting quote I just read. Okay. So, Jeff Bezos. We all know who Jeff Bezos is. He was interviewing Warren Buffett about investing. Okay, this is an interesting little exchange here. It says, Bezos asked, he says, your investment thesis is so simple. You're the second richest guy in the world. And and Buffett was explaining his investment thesis, basically what you said. He said, just stay invested. Don't try to flip it and get in and out and time the market. Just stay invested, be in it for the long haul. So let me restate Bezos. Your investment thesis is so simple. You're the second richest guy in the world. And it's so simple. Why doesn't everybody just copy you? And Buffett says, because nobody wants to get rich slow.
It's so true.
And that's the problem with everybody is they're out chasing something. And there's a couple, I see this so much. One is I see people chasing a big score, so to speak, and they fall on their face. The other thing is I see people looking for the next Uber or the next big thing, and so they do nothing. They do nothing. They don't even save, let alone invest, because they're waiting for this thing that's going to like solve their problems in the next 30 days. No, you've got to get focused in setting that money aside and investing it. And I think where we run across a lot of people at Directed IRA and like the 750 accounts last month, they already have money. They've already gone to the effort of saving it, setting it aside in their IRA or 401k, and they've been investing it. But when they come over to us, and we don't tell them where to invest their money, but when they come to us, they're saying, if I can get a bigger rate of return, I will have a larger account at retirement. And that's why they want to self-direct, whether they're interested in real estate and non-publicly traded assets, is they feel like they can get a better rate of return. So they'll have a bigger retirement account when they get to the end of the day. But it's slow. It's not like they're trying to do it tomorrow.
Hi, this is Melanie McCallan. Josh and I are just so grateful for the many investors who have already joined us at Accountable Equity. Accountable Equity is so much more than a capital group. It's really a community of accredited investors that want to learn and grow together. I just want to personally invite you, if you want to find out more about this type of investment and see if it's right for you and your family, please visit us at accountableequity.com. You can fill out the contact form. We'll get right back to you and see if this is a great fit for you and your family. We'd love to meet you. We look forward to learning about you. Please visit us at accountableequity.com.
Hey, it's Hal Elrod, author of The Miracle Morning, and you're listening to Capital Hacking. Enjoy.
And John, I have so many other quick ones with Matt, but I want to let you have a chance because I know how excited you were to get this guy on the show.
Yeah. So one of the questions that I had, Matt, was could people like take their IRA and redirect it to lend money, like for example, either hard money or bridge loans?
Absolutely.
That's not really talked about too much.
Yeah, absolutely. I mean, it's actually what I do with my account. So I'm invested in some funds, and I bought some rentals, and but the most of my money on my own account is in private money lending right now. And so here's why. And this gets to the get rich slow and finding investments that can kind of beat the market. Everybody, there's no rule to 72. It says you take 72, you divide it by the rate of return, and it'll tell you how long it takes for your money to double, right? So let's say you're getting a 10% rate of return. 72 divided by 10 is 7.2 years. Every 7.2 years, your money will double. So your 100 grand that you invest at a 10% rate of return will turn into 200 grand in 7.2 years. And then 7.2 years past that, now we're at 14 years, that 200 grand is 400 grand, right? And we're in at 14 years. Well, if I can increase my rate of return from 10% to 16% annual rate of return, and I got 100 grand. Now you take 72 divided by 16. Okay, your money is going to double every 4.5 years, I think, approximately 4.6, I think. So, and that's what I'm getting on my money. Okay, I'm lending my money at 12% interest, 2 points, and I lend it in 6-month terms, and so I usually lend it twice a year. Wow. And if they take longer than a year or 6 months, then they get charged another 2 points. So I'm getting a 16% rate of return on my money. Now, if I can maintain that, here's what happens. In 4.5 years, that's 200 grand. In 9 years, that's 400 grand. In 13 years, that's 800 grand. And in, I think it's actually 18 years is the total number. At 18 years, it's $1.6 million. Just that $100,000 being invested. And see, and this is where Bezos is asking Buffett, it's not like no one's thinking 16% rate of return, that's the greatest investment of all time. No, it's about being consistent and letting it compound and grow over time and being patient, but also being engaged to get investments that can return those type of returns. So that's what I love about it. And I was just kind of on a tangent there, but that's what you could do with private money lending. That's what you could do in other alternative investments. And that's what's drawing people to retirement accounts, is because they don't feel the stock market's going to deliver the returns to grow and compound over a 10, 20-year window.
Well,
Thank you.
Here's the great news, John. Today's the announcement, big and bold, August 23rd, a VIP dinner with our good friend Mat Sorensen at Renault Winery, followed by a full day of masterminding sessions, extremely high level accredited investor networking the next day on Saturday, the 24th. That is what we're talking about here. This is our celebrity guest. Today it's been announced. The news is out. Mat Sorensen will be coming across the whole country. We want to make sure everybody who's in directed IRA in the East Coast should just come up and see you. We'll treat you like gold. But I want to tease them a little more, because not only will the content be great, but there's another surprise about you that most people don't know. And I think I know. What's one activity that you're hoping to do on a bucket list someday?
Oof. A bucket list item. I need to get a rock and roll band together.
Okay. See, that's actually similar to what I thought you were going to say.
Were you in it? Were you in a rock band?
Yeah, but like a cover band, but still a heck of a good time.
Awesome. We could probably make that happen for you if you want to do it at our event. The other thing that you took,
I could sing, right, Josh? I'll sing.
You're good.
You play, I'll sing.
Matt won me over years ago when who was it? Yeah, we were at an event together, and you said to me, oh no, it was a podcast with us a couple years ago, and you said, yeah, I want to do stand-up comedy. I'd love to. That's on my bucket list.
It's on my list too.
And I was like, what dude says that? Like, that is ballsy. It's hard to do stand-up comedy.
I know.
And then I still hope to get that all put together for you in Manhattan at a comedy club. Just make your dreams come true. But in the meantime,
that's on my list.
I knew it was.
Yeah. In fact, that's my new thing when we go travel and I'm speaking at conferences, actually. I was just in DC at an industry conference I spoke at, and there's a comedy club there that's a great little they do a Tuesday open mic night, and it's kind of like where the comedians are all just working their new material.
Yeah.
I freaking love it. I'm like, oh, I want to do this one.
Okay, so
Anyways.
Matt, you got to raise your right hand and say, if I'm in DC, I'm going to go visit Josh's little resort near DC. You got to come over on the water.
Yes.
Now, so we've plugged the big trip. Can't wait to meet some of your groupies. You're a celebrity on Instagram. You're a value-based content provider. You're the best. You're the #1 author in your space. Now, to tease it a little more, John is cooking up some crazy great ideas for when you're out here with us, including a session. This is just a tease. We call it Bulls versus Bears, Bulls versus Bears. And it's when the audience judges you based on your debating skills, because we're going to have not only you give a great keynote about a whole new perspective on direct investing yourself and directed IRA, of course, but we're going to have you combating a strategic CPA that, is a CPA for many of us. He's a phenomenal presenter, and he's going to be arguing for investing in real estate, not using an IRA. And you're going to be arguing for investing in an IRA in real estate, which is a debate, by the way. That's an academic debate. People sometimes argue. Don't tease them too much now, but you're going to be, it's going to be unbelievably powerful.
It's going to be fun.
Right, John?
It's going to be a lot of fun. We're going to paddle to the audience for guys to, and women, people to vote, on who won each round.
Raucous.
We'll do 3 rounds like a boxing fight. Yeah, it'll be great.
And John will run that. He does that for GoBundance sometimes. So, Matt, any final words, since it's been great to have you back on the show?
No, I think what I would just say my final words is you've got to take action on this stuff. When you're starting to learn something and something piques your curiosity, oh man, I do have money in an IRA sitting around. The biggest danger for people in building long-term wealth is doing nothing. It's not action. It's actually inaction.
That's true.
It's inaction. And you know what's happened is Wall Street is like, they've deceived us in many ways, or we fell into their trap of just set it and forget it. Just fill out this form and tell us, I want to retire when I'm 60 and I want to invest moderately aggressive and I'm 40 years old, and they pick what target date fund to put you in, and you don't even know the name of it. You don't track the returns. You're totally detached from it, yet you've got $200,000, $300,000 invested in that. And so start getting engaged, whether you're going to invest in alternatives or doing self-directing, or you're just going to do something else with a brokerage or other thing. Get freaking engaged in it. This is a huge pot of money for most Americans. Make sure you understand how you're earning it and how it can grow. And if you think about the compounding example I gave you earlier, that this is going to be your retirement account. Social Security's not going to be there for you. This is your retirement account that you're either going to have to look forward to in retirement, or you're going to be freaking dreading. So just get engaged with it.
Wow.
And try to get attached to that money.
That's exactly why we do these learning grows, John, is we want people to take action. And sometimes, Matt, taking action is being inspired by common sense, principles about investing, like what you've shared here. Meeting other people that are already doing it, I think, is the #1 way to get out of inertia and get into action. And that's why we make these forums possible. So I love having you on the show. How can we follow up with you?
Well, we're going to be out there in New Jersey. If anybody needs to learn how to self-direct, can I move my account over? They got basic questions, get to directedira.com. You can book a call with one of our new account reps. They'll go through the process, answer your questions. We've got tons of content. We've got our Directed IRA podcast. We've got our Self-Directed IRA Summit. We have our Alt Asset Summit coming up, which you're going to speak at, Josh, right?
Amen, brother.
Okay, that'll be in Scottsdale in October. And so we have a lot of content out there meant to be educational in nature, because investing does take gaining some knowledge. It's taking action, but it's also learning and networking and meeting with people and doing those things. And so we're trying to give you all those resources so you can actually take control.
Awesome. Matt, thank you so much, man. This was awesome.
Yeah, was great. Can't wait to see you in person, buddy.
All right. See you then, guys.
Damn straight. We just got we got to the end of another great show. And everyone listening right now, you're the family and friends. Thanks for staying till the end.
That was so fun. And hey, hit the like, hit subscribe. We're here to serve you guys. That's why we're doing this show. Josh is not paying me. I'm doing this off of my quote unquote sweat equity, because we want to make a difference in your life. And then that ripple effect will continue to touch the world.
Hey, amen, brother. Please check us out on capitalhacking.com, all the social media threads. And yes, I know you've probably already sent this episode to one of your best friends. Thank you. We love you. Just go right into your iPhone, hit the plus symbol. We'll talk to you later. See you next week.
Share.